would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to a day after edition of Real Estate Realities with the Rebel Broker. My name is Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please don't hold that against me. As always, folks, if you'd like to get in contact with me, please feel free to head on over to therebelbroker.com. From there, you can send me any ideas, suggestions, observations, or questions that you might have. You can also support the show and put yourself in the drawing for a $50 Amazon gift card by simply clicking the button at the very tippy top of the page. It's bright red, hard to miss, titled Take the Survey to Support the Show. Use the same email address both times you're asked, answer a few questions. Voila, you are done. You've helped the show and you've put yourself in the drawing for our Amazon gift card. We've already given away two. We gave one away in October. We've given another one away in November, and we will give another one away in December. So put yourself in the drawing for that. If you'd like to join the Rebel Underground, text the word Rebel Broker to the number 44222. That's text the word Rebel Broker to the number 44222. Well, folks, I do not know who the president is yet. As I record this, only parts of, if I'm reading this right, only parts of New Hampshire have reported in. And Donald Trump is leading at 52% to Hillary Clinton's 41%. And you know, in general terms, I mean, without, I get that there's going to be people who want to vote for Trump. I get there's folks who want to vote for Clinton. In terms of just improving things moving forward, I would love to see at least one other third party get 5% or more of the popular vote. And the reason is because then they will qualify for campaign funds next time around. Right now, the Libertarian Party is sitting at 7% of the vote in New Hampshire. So obviously, we can't call the race based on that, but right now that's what I'm seeing as I look on the U.S. election results page for Google. So for those of you who's supported candidate 1, congratulations. For those of you who supported candidate lost, you have my condolences. For those of you who have pretty much come to the conclusion that no matter which candidate wins, we all lost, welcome to the club. Glad to have you with me. Might be time for an adult beverage because I think a rocky ride lies ahead. Okay. That's it. That's all I've got. Sorry. You know, it's interesting the things that I get feedback on. And of course, one of the folks who responded to yesterday's show was our good buddy Scott Blasius up in Sacramento. Hey, Scott. Who took issue with my claim that you shouldn't be using a smartphone for your home shots. And I wanted to sort of recover that ground a little bit because I think it's worth mentioning because Scott's one of the good guys. So, and I think it's perfectly reasonable for us to have disagreements on minor points of conduct now and then with what we use. And in his defense, I still disagree with him, but at least he's going out of his way to use one of those enhanced wide-angle lenses that you can strap onto your iPhone, and he's using special software that's designed to enhance the photos. And if I remember his message correctly, he also uses a tripod. So those are all great things and fantastic. I've done the same thing. I may even have the exact same lens he does for my iPhone because I went ahead and gave that a try just to see. And I would still make the argument that when you're doing your home photos, it's really about starting with the absolute highest level of quality that you can get, because you can always take gigantic photos or super high resolution photos and do stuff to them to make them even better or make them smaller and adapt them for a lot of different uses. Whereas frequently you can't do that with even really good iPhone photos that are using those extra tools. And for me, it really comes down to three different things. And it's the reason why I still drag around a DSLR for taking my photos of my listings. One is the lens. No matter what kind of extra junk you're going to buy for your iPhone, the bottom line is you're never going to get glass as good as the glass that you're going to get on a DSLR. And the other truth of the matter is I have several different lenses I use for several different scenarios. So I've got that flexibility. And I realize you can buy different lenses for your iPhone. But the reality is, no matter how many megapixels you get on that chip, it's never going to be of the quality of something you're going to get out of, like, say, a Nikon DSLR, simply because all of that electronics inside of that phone is absolutely 100% focused on creating the best image possible. When you're doing it on your iPhone, you have a chip that does that. So, and the bottom line is you also have a very limited glass between that chip and the outside world. And no matter what you put outside of your phone, you still have to funnel it through the crappy glass that it comes with. So that's reason number one. So it's not really so much about the megapixels for me. It really is about the ability to put on different lenses. Another one is lighting. And there's two aspects to this. One is, and it relates to the lens issue, is a bigger lens is going to let in more light, right? So that results in higher quality photos. And no matter what you do with the lenses that you strap onto an iPhone, those things are still relatively small lenses. So you're not letting in as much light as you possibly could. And in my case, the lighting issue becomes a bigger deal because not all homes are super well lit naturally. And the only source of additional light that you get off of your iPhone is that goofy little flash. And it kind of sucks. I've seen little things that you can lay over it that are actually built into lenses you can put over that stuff that are then diffusers that diffuse the light. I would much rather have an honest-to-God flash on top of my camera that I can then point in different directions, put a diffuser on, do all these different things with. Or in the case of my setup, I actually don't usually have just one flash. I usually have 3 flashes, and they're all linked. So, in other words, when I take a photo, all 3 of my flashes go off, and I don't even have to have my flash attached to the top of my camera. I can slip a little thing on top of my camera. They're all linked to that little thing slipped on top of my camera, and I could put a flash way off to the left. I can have one way behind me. I can have one right at my feet, or I could put it up on a counter. In other words, I'm able to really fine-tune the lighting and give a great balance to the scene, which is going to contribute towards having the best raw photo, the best high-resolution photo I can get. Next is stability. And this is something else that Scott does. He puts his iPhone on a tripod. But the reason why you want to put, and I actually don't physically touch my camera when I take shots. I put it on a tripod and I have it's linked to a little button that's on a key fob looking thing that I can take pictures with. Now, why do I do that? Because I want my camera to be absolutely still when it takes photos, because in very low light conditions, if I'm finding my flashes are laying out too much light and I'm removing it and I want to try to use the natural light in the room, I can then let the camera sit with an open aperture setting for a much longer time. So, and since it's motionless, there's no worry about things being out of focus. There's no worry about blurring from motion. So I don't even want my finger touching the button to be causing any motion to the camera. So those are the 3. And over years and years and years of doing this, all the way back to when I never did it, right? When in order to get really good photos, you simply had to hire someone because they had to come back with physical photographs. As soon as it got to the point where we could start doing this stuff, I've done it. I've tried to embrace the whole iPhone only thing. And it never gives me what I want at that raw high level of graphics, because remember, it's about standing out. So one of the things that I do is I put my photos into each of the top browsing sites at the highest resolution. And let me give you an example of why that's important. Under my system, when I submit to the MLS system, it automatically aggregates that out to Trulia and Zillow. If you just let the photos that are automatically aggregated, at least out of my MLS system, this may be different for other real estate agents' MLS systems, but they do not get the super high resolution photos that I tend to upload to my MLS system. My MLS system tends to raster them down to the maximum size they'll present on the screen, which isn't full screen. But Zillow and Trulia will let you do that. They will let you do bigger sizes for photos. So I get rid of all the photos that get automatically aggregated from the MLS, and I upload super high resolution versions of those photos. So when folks, and this absolutely, go do it. Go look on Trulia or Zillow for different listings in Silicon Valley, for instance, which is obviously where most of my experience is. And what you're going to see is okay photos, but no real standouts because the resolution tends to be not so great. Because what most agents are doing are letting Trulia and Zillow inherit whatever the MLS system fed them. Whereas I go in and I upload the highest resolution I can. So I end up being able to let folks look at these super large, really well balanced, great photos of the house that are going to be far more enticing. And I'm all about overcoming that first barrier, which is the online introduction of your property to the buying public, right? So, I want my photos to be suitable for any purpose. If I decide I want to blow that sucker up to poster size, I can do it with the photos I get off of my DSLR. I can create really amazing flyers, for instance, if I want to go with real slick folding brochures to stick in front of the house in the brochure box or whatever. These photos are absolutely suitable for any method of delivery. So that's kind of why I lean that way. Now, will the other way work? Yeah. Scott's setup is absolutely going to look better than probably 80 or 90% of every other real estate agent's photos. The only folks who are going to beat him are going to be, honestly, probably guys like me who are still doing the DSLR thing, but then also probably people that are paying someone to come out and professionally shoot their house. And that there's all different layers to that as well. So I guess you're still winning. I mean, if you're absolutely taking your iPhone or whatever phone or whatever camera phone you're using to the maximum level that it can go, you're doing more than a huge number, than the vast majority. And I actually like the idea of agents sort of taking the photos themselves. I think oftentimes a real estate agent often has a little bit better vision in terms of what they want and what they want to emphasize. But there's something to be said also for getting those professional shoots done. And I'll still use those on occasion, but I'll always go and ask for some specific shots from specific angles and all that other kind of stuff. So anyway, so I thought I'd address that. I think you want someone who is at least taking the photo process seriously enough that they have purchased tools to make their smartphone photos the best they can possibly be. If you get someone who's just walking around pulling their iPhone out of their pocket and starting to take shots and planning to use those as the poster picture for your property, I'm a little bit less confident about that. And I think I'm biased, right? I've lived in this market long enough to see absolutely horrible, ridiculously bad photos that would turn off anybody. So I guess maybe I'm just a little bit more sensitive to it, I guess, than a lot of other folks. And I don't want to pick on Scott because I think, as I said, I don't know any other agents that do what I do, that still use a DSLR. I'll be honest. Everyone I know is either hiring somebody or just using their iPhone. And the vast majority of them are just using their iPhone or their Android. So the fact that Scott is taking it to the next level, kicking it up so he's getting the absolute best possible photo he can out of that setup, I think says a lot about his dedication to wanting to do things better than everybody else. So I think there is absolutely a that'll do range, and for taking photos, that whole iPhone, but you've really got to max out the tools and have the add-ons to make it work, is absolutely adequate. I'm still coming down on the DSLR side, just because I want to have photos that'll work with anything. What would really stink is getting a couple of weeks into the process and deciding you wanted to try a different avenue of approach of marketing and realize that the photos you've got might not look so good in X or Y usage. So something just changed in the election results. I should just close this. Why do I even have this open? It's the count of the electorals of the electoral votes. And right now Clinton has 3 and Trump has 19. So I'll give you that update. And I'm now going to close this window because I don't want to see it anymore. All right, folks, I'm going to take a quick break right now. So don't go away. We'll be right back. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right. Aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We just wrapped up a quick chat covering some very brief what's going on with the election stuff. But then also chatted a little bit about updating my take on taking the photographs for your property. There's absolutely room for disagreement here. So I get my approach might be overkill. But I like the idea of being ready for anything given the raw photos I've taken without ever having to go back and take them again. So take that for what it's worth. I absolutely think there are agents out there doing it the way that Scott's doing it that are absolutely kicking it out of the park and doing a great job. It's just one of those things where I think there's plenty of room for disagreement. All right, so what we wanted to do next in terms of just getting some good payoff for today's show was talking about the 10 best markets for real estate investors. Now, these are the numbers for 2016, and there's 2 ways for us to sort of look at this, right? This is from the Bigger Pockets people, and these are the same folks. If you've been a long-time listener to the show, you know that a couple of years ago we reviewed this particular report, and this is the one that told us about looking at Round Rock just north of Austin, and I had talked about how I, in fact, I think at the time I wanted to simply go and do it. I did a poll and I asked people to vote of the different areas that they called out that were supposed to be big in 2015 or 2016. It would have been big in 2015, I guess. Which place would listeners like me to go to and actually check the market out? And Austin and Round Rock actually won. Unfortunately, that trip never ended up happening. Things were just too busy that year. But this report is interesting because it was right on the money. It hit all the marks. And when we reviewed, kind of kept an eye on those top areas that we were interested in, absolutely correct. If I had done what I was suggesting I wanted to do and made an investment in any one of those areas, I'd be a super happy investor right now. So what I thought we would do is this is sort of a look back on the year of 2016 and look at these 10 best real estate markets for investors, get a little bit of an idea on how they benefited in terms of on 3 basic metrics. In terms of total return, in terms of rent to value, and in terms of appreciation, how did they end up doing? Well, obviously with the total return being a nice big payoff. But in fact, I'm not even sure that all these numbers, they do it in a graph form, which I'll absolutely include in my Pinterest feed. So feel free to check that out. And I'll also have a link to this article, which has these graphics in it if you'd like to check those out. So let's go ahead and run down this list. We'll start with 10 markets offering investors the highest total returns. An interesting shift in this list, but kind of kind of an interesting shift for a couple of reasons. One, what we've seen as typically the number 1 or number 2 city has dropped down to number 10 on this list, but also interesting at how much focus there is on just a handful of states. So let's go ahead and start. Number 10 on our list, and surprising to me in where it shows up on the total return list, is Austin, Texas, with a total return of 15.55%. Now that's pretty awesome. And remember, we're starting at number 10, so it only gets better from here. Next, again, this is highest total returns, is Austin, Texas at 15 point, is that a 6 or an 8? I hate going blind. A 15.63% total return. Next on our list at number 8 is Atlanta, Georgia, 16.2%. That's actually freaking amazing, and with great appreciation and rent to value ratings too, which we'll talk about here in a minute. Nashville, Tennessee, man, have we talked a lot about Tennessee. I only see Tennessee represented once on this list. Nashville has been on the list. Chattanooga has been on the list before. Not just this list, but a lot of crossover. So Austin, Houston, Atlanta, Nashville, these are all cities that we've seen a lot of crossover in terms of other metrics, right, that we've used in terms of migration patterns, in terms of things that draw in millennials, or the largest number of folks that would be interested in the lifestyle that the city provides, all these kinds of things. And a lot of these are crossovers. So again, Nashville, Tennessee is at 16.73. Seattle, Washington comes in at number 6 on our list at 17.18. Number 4 on our list is Tampa, Florida with 17.82. Miami, Florida is number 4 at 18.12 total return. Denver, Colorado, another one that's been on almost all of our lists, 19.23% for total return, with ridiculous appreciation numbers, which we'll talk about in a minute. Portland, Oregon comes in at number 2 with 19.91. Again, ridiculous appreciation numbers there, and surprisingly low on rent to value, but still a great return overall. And then number 1, we go back to Texas again. Dallas, Texas, 20.7% total rate of return. That's pretty amazing. The question you need to ask is, remember, this is a backward-looking view. So the question we need to ask is, where are we in that cycle for these various cities? So I think a good way to take a look at that would be to get a much longer rear view plot of the marketplace in these various areas and try to get an idea or a feel for if this is something that's going to be a continuing trend, or is this something that we need to use as an indicator that we may be at the top of a market. What's good about this, though, is these exact same folks are going to be putting out their own report soon on what to expect in 2017. And if their track record is anything to go by, these are great folks to listen to when it comes to figuring out what communities should catch your eye if you're looking to invest in 2017. Now, before we move on and rank those top 10 by some other stats, or by rent to value and appreciation specifically, I thought it would be interesting to run down the 10 worst performing markets for real estate investors. Let's see here. Number 10, Fort Myers, Florida with 10.51 total return. San Diego, California, 10.36. Los Angeles, California, 9.62. Virginia Beach, Virginia, 9.5%. Providence, Rhode Island, 9.12%. New York, 8.7%. Baltimore, Maryland, 8.22%. Hartford, Connecticut, 8.16%. Washington, D.C., which I think is a really interesting number, because remember how Washington, D.C. for previous years was on the absolute growth end. This Washington, D.C. was at the top of some of these lists a year ago. Very interesting turn of events in Washington, D.C. So clearly, this is a place that hit its peak and dropped hard, but it was down to 7.69 in terms of its total return. And then Indianapolis, Indiana, 5.02%. with actual negative appreciation numbers. So that market really got hit hard. and defined it as the worst place to invest. Now, before we move on to some of these other numbers, let me also point out that one thing I love about an article like you get from Bigger Pockets is you're actually able to download the spreadsheet for all of their stuff. biggerpockets.Com, the world's largest online hub for real estate investors, today released its 2016 Bigger Pockets Real Estate Investment Market Index. Downloadable spreadsheet available here. I love it. It's an index analyzing the 15 largest U.S. metropolitan statistical areas. So if you don't hear a town you like on this top 10 or bottom 10 list, you can head on over and download that spreadsheet and check it out for yourself and see where your favorite communities placed in this particular list. So head on over there and check that out. And again, there will be a link to that in the show notes for today's show, so you can take advantage of that. All right, next. We already covered the top 10 worst or the 10 worst. Now here we're going to talk about the top 10 markets for residential property appreciation. So this is clearly one you want to have in your matrix, but I'm also going to argue that while this is good, because it's always good, right, for the property to end up being worth more, I'm very much a cash flow guy. And I understand that for accounting purposes and projection purposes and for folks who have that idea of jumping out when property values reach a certain point, I get that is all a critical component of having your investment strategy and being a primary deciding factor for a lot of folks. And it's absolutely something I continue to track, but for me, it carries a lot less weight. And some folks are probably saying, well, wait, Robert, didn't you just contradict yourself? If you've listened to previous shows, you know I'm talking about selling this place because of the fact that it's at a certain point, it's appreciated to a certain point where I can turn around and leverage that to potentially purchase 2 other properties. Yeah, I think that's a relatively fair criticism. But for me in this case, when you take it as a cash flow proposition, when you take it from the proposition of total utility, of where my money can do the most good or work the hardest for me, that's really more what's informing this. And I'm sure that's probably what's going to be the motivating factor for a lot of folks to consider this one as well. But if the circumstances were different, let's pretend that I could make a lot more rent for the home that I'm currently in. If the cash flow situation on this property was a little bit more beneficial to me, regardless of the appreciation I've enjoyed, I would rent this place rather than sell it. So it's absolutely going to be a judgment call based on where your property is. I'm far more swayed by return on investment than I am by appreciation. And I normally don't suggest that folks budget based on appreciation. I think it's a lot easier to ballpark what's going to happen with rental rates and to see potential drops in rental rates ahead of time than it is to see drops in the market. People tend to change house not as abruptly as markets can frequently change, since a lot of those things that affect what the price of a home is affected by a lot of external financial things that oftentimes are difficult to anticipate. Okay. All right, so the chart that we're looking at now, and again, I will post this one to Pinterest. It's the 10 best markets for appreciation. So if you're someone who is really into the appreciation thing, if that's going to be your primary thing, if you're interested in generating cash flow on a month-to-month basis, but you're not someone who's worried about really doing anything with that, you want to just accumulate that money and have that just be basically icing on the cake for you, and you're far more into appreciation of the asset, then these are obviously areas that you might want to consider. Number 10 on our list was Tampa, Florida, with appreciation of 9.26. Austin, Texas was number 9 with 9.31%. Nashville, Tennessee was 8th with 10.28. Miami, Florida was 7th with 10.47. San Francisco was number 6th with 10.51. And we've had conversations about this. I think that's a slowing number. So it's San Francisco, I think, is a good example, and there's another city on this list actually that I think is a good example of places where this trend may not carry on at these levels. So San Francisco was 10.51, Seattle, Washington was 11.64, and this is again just appreciation. San Jose, California, 11.72%. Another city where I'm not so sure you're going to see those same numbers a year from now. Dallas, Texas, 13.09% appreciation. Denver, Colorado, 13.76, making it number 2 on our list. And then number 1, Portland, Oregon, with 14.59. Now, one thing that you want to do is in each one of these various cities, I would plot with this data what the average price of a home in those areas is. And that's when you're going to start to see the dramatic differences. You know, San Francisco is something in the neighborhood of 1.2 million. San Jose is something in the neighborhood of 1 million. These other areas are not anywhere near that number. So the barrier to entry there in some of these markets is absolutely nuts. But then again, making 10.5% on $1 million versus making 10.47% on $300,000. That's kind of nice. That's a nice chunk of change that you're making just on appreciation. Now let's go ahead and talk about the top 10 markets for strong rent to value ratios. Number 10 on our list, Jacksonville, Florida at 7.84%, Pittsburgh, Pennsylvania at 7.88%, Oklahoma City came in at number 8 at 7.97%. San Antonio, Texas came in at 7.99%. Kansas City, Missouri came in at 8.1%. Atlanta, Georgia came in at 8.16%. Birmingham, Alabama came in at number 4, 8.24% rent to value ratio. Tampa, Florida came in at 8.35%. At number 2, this one's going to blow you away, Detroit, Michigan came in at 8.96 in terms of most favorable rent to value ratios. Now, that should make sense simply because home acquisition in Detroit is ridiculously low right now. Prices are exceptionally low in Detroit. So the rent that you're able to get, if you're smartly purchasing in areas where you can actually get that rent, they're getting the second highest rent to value ratios going on in Detroit. And number 1 on our list, Memphis, Tennessee, 10.07% in terms of rent to value ratios. Now, I wanted to also cover here just real quickly what their methodology is. It's always good to know this stuff, and of course, you can read this for yourself. I will be linking to this in the show notes. The index seeks to determine which of the 50 most populous U.S. metro markets were most likely to have provided strong returns for residential real estate investors between early 2015 and early 2016. This index measures both appreciation and gross rents as a percentage of average purchase prices. So, all good. Let's see. I'm just looking for any gotchas here that we want to share here. A multi-step process was used to aggregate data that allowed for a reasonable estimate of appreciation and gross rents collected as a function of beginning property values in the top 50 metro areas. Aggregate property data ultimately derives from Zillow's Home Value Index, where we look at the median sales price, and an original copy of the data set is available upon request or at zillow.com/research/data. So they're using Zillow data. And I think it's always important to know where they're getting some of these data points just so that you can calibrate yourself. Because if you don't trust Zillow data, probably shouldn't be trusting a report like this. But again, just pointing out, these guys have actually tended to be really good in the past in terms of their expectations for the future, which I'm really anxious to see as soon as they put that out, which of course we'll share here. All right, folks. Thank you very much. I do appreciate you spending your so valuable time with me. I hope that in exchange, I am providing you some at least interesting real estate data or insights that you can use in your fun time with real estate. Thanks again for listening, everybody. I'll talk to y'all next time.